Good morning everyone and welcome to Morning Markets from True Potential. Today I'll discuss how equity, bond and currency markets performed yesterday, then touching on the Bank of England's latest monetary policy meeting. Yesterday, equity markets in the main indices were positive. The FTSE 100 was up 0.5%. In Europe, that was up 1.1%, and in the US, the S&P 500 was up 0.6% and the Nasdaq up 0.7%. Both the two US markets set fresh all-time highs. Value sectors received a boost after Joe Biden and the bipartisan Senate group announced an agreement on a new infrastructure deal. The outline includes $579 billion in new spending on hard infrastructure such as roads, bridges and broadband, and it comes with no new taxes. Overnight, Japan was up 0.7%. After last week's attention on the Federal Reserve's monetary policy meeting, this week it was the turn of the Bank of England. We've talked a lot about the encouraging economic data and improving outlook for the UK as the lockdown restrictions have eased in recent months. Investors were keen to see if the Bank of England would offer any clues when they may begin to tighten monetary policy. The latest message from the central bank was a cautious but upbeat one. Both quantitative easing and interest rates were left, despite a vote to end the former early from outgoing chief economist Andy Haldane. More importantly, the committee resisted offering any more insight of future tightening. The latest statement borrows both from the ECB and the Federal Reserve's hymn sheets. From the former by emphasizing against premature tightening in monetary conditions, and from the latter by signalling it wanted to see significant progress before looking at removing stimulus. The lack of strong hints about interest rate hike timing is arguably because there's no real need to guide markets at this stage. The policy statement was more optimistic this month, with the committee expecting the economy to grow 5.5% in Q2, up from 4.25% expected in May. It also predicts CPI inflation will exceed the 3% compared to a peak of 2.5% previously forecasted. However, they continue to believe it will be transitory, with higher oil and commodity prices rolling through the calculation. Following the announcement, we saw a bit of weakness in sterling while gilt yields dipped, falling 4 basis points to 0.74%, largely reflected some thoughts prior to the decision that the Bank of England could follow the Fed and err on the hawkish side, i.e. be inclined to pull back on QE or discuss higher interest rates. Currency markets fairly flat over the day. Sterling was pretty much unchanged at 139, and against the euro pretty much unchanged at 117. Thank you for listening, and we'll see you again on Monday.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.